Guess what happened in all of these situations? All of these situations involve some level of fear. If jobs data smash hits today, do stocks go up or down? Is that right now the market's narrative in terms of the stock world is everything must rally.
But it's better sometimes to wait for a clearer ranging structure, then the market can continue.
I totally agree. All right, let's see what kind of reactions we get here this morning to NFP. We've seen a trend towards cooling economic data. You've had a lot of tech layoffs. I don't know. Let me see. I really want to quickly just pull up something on the NFP chart. So in the previous NFP, this is our NFP chart, by the way. We had a lot of fun building this, and quite the page, I think. We have everything we need here on one screen. We have the jobs that were created. These are in thousands, and I should add that. These are in thousands. Obviously, we did not add as an entire economy 353 jobs. Otherwise, we would all be, we would not be here. We would be probably like World War III or something. I don't know. Anyways, 353,000 jobs. But today we'll also see, and this last report was a really big report. So today, what's really key for us, guys, is that revisions to this number. They always revise numbers, but sometimes they revise them higher, sometimes they revise them lower. We've added for EdgeFinder users who track jobs, which you should be tracking jobs, it's a really important piece. We've added revisions into our system here. So you can actually see the yellow line represents the revised numbers, and oftentimes they're not exactly the same. So last jobs data, we had a smash hit, 353,000 jobs. But remember, it wasn't just that. We also revised the one before it to be higher, right? So today, in our February reporting, which by the way, it does track January, and I gotta think of a way to better illustrate that on this chart. We could do a little bit of improvement there. This was reported February 2nd, but it was on behalf of January's jobs data, right? Because we report the previous month at the start of the new one. So today we get February's data. And so the thing you want to look for is obviously you want to see a strong jobs number come out, but you also want to see the revisions not do this, right? If you see revisions do this, then that is going to be weak for the dollar. It's going to be threatening to maybe to the stock market, right? But not at the same time. Stocks, this is confusing. Can I ask you guys as an audience to answer something for me? And Dan, I'd love your take on this because it's tricky. Okay, trick question. Everybody ready for a trick question for my fundamentalists in the room? If jobs data is really strong here today, and be careful with this, it's going to sound like it's an obvious answer, but it's not. Okay, ready? Thank you, Dan. I need Dan's help, and I need all of you guys' help on this. If jobs data smash hits today, do stocks go up or down? As a whole, let's say S&P 500, not the Russell, not pockets of the market that are more sensitive or less sensitive to rates. If jobs data comes out with a smash hit today, obviously we know dollar probably up, gold probably down, but stocks, it's tricky. And you're gonna, and again, if you think it's an obvious answer, it's kind of not, because here's the thing: if jobs data is hot, the market's been rallying on the idea recently that rate cuts are coming sooner. So if jobs are hot, and that takes that cup of tea away from stocks, but at the same time, Dan, as you just pointed out, stocks could go up because more money equals more buying of stocks. That's fair too. That's why it's confusing, because you can make a case. You could say, and here's the thing, here's the reality. And Dan, you might remember this. In 2022, okay, in 2022, jobs data, if it came out better than expected, the market would sell off. If the jobs data came out worse than expected, the market would sell off. It almost didn't matter, right? It does matter. It's obviously a very important metric, but sometimes the sentiment of the market will find the answer that it wants to. And that's the scary thing about this. And here's coming from somebody who I would like to see a pullback in the indices. But I'm saying that the troublesome thing to me is that right now the market's narrative in terms of the stock world is everything must rally.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So is it necessarily, I would actually agree, Dan, that I think that jobs data being strong should be good for stocks. That's generally how I see it. Unless, of course, the market is just super, super hyped up on rate cuts, right? Earnings are the big one for me. Yeah, Dan, totally. Dan, you're right on the money with that. Earnings at the end of the day, that is straight up. That's like as binary as I think you can get with stocks. Good earnings, good outcomes for stocks. But yeah, I think where we can be a little bit more straightforward with this is we can talk about some of the commodities, and obviously the currency is pretty easy. Not easy, but the dollar index has been on a sell-off here recently. I have recently abandoned ship short term on my dollar bullish idea. I've just seen too many numbers coming out, cooling down for now. PMIs, right? And I can list them, right? Because I'm obsessive about this stuff. PMIs, both services and manufacturing. You had GDP, right? Preliminary GDP numbers came out cooler than expected. You had consumer sentiment, which came out worse than expected, right? So you have a lot of things here that are concerning. You have yields dropping, and you have a Fed that's kind of still pointing towards rate cuts. Now, I'm not necessarily a dollar bear either. I'm really, today's number is going to help me decide what I do with my dollar thesis, right? Because right now I'm back to neutral. In fact, I'm looking at this and I'm saying if the numbers keep cooling like this, if we see cool jobs data today, I probably have to get short bias on the dollar. But again, that's why we wait for data to make sure. But again, I think here's my setup, guys. If we see jobs data come out cool today, and this dollar breaks down, what I think happens is the path of least resistance. I think the river is flowing lower from there, right? And that's where I love to trade. I love to trade when the bias is just super obvious. Like if you're a fundamentalist, the bias becomes very obvious. And usually by then, that's about where the edge finder starts to pick it up. All the indicators say the same thing, and we stay in the same camp. What I do love is that gold has been early to the move. I've been long gold. And I know a lot of you guys in the audience trade gold as well. This has been a just crazy runner, just shot straight to the upside. And I've been on a win streak recently, which, I kind of feel like I got away with something with this because I was dollar bullish for a little while, but I saw early signals in the edge finders setups, like economic data kept coming in cool. And so I kind of semi-hedged. I started going long gold, etc. And it's been an interesting play. Anyways, today matters for gold big time. Today is like gold's Super Bowl day, because if you get jobs data that's hot today, if NFP is strong and the dollar strengthens rapidly and that happens, then likely what happens to gold is we see a sell-off. Now, it doesn't have to crash, but if you do see really hot jobs data, what you have to understand is that hot jobs data is going to push back rate cut expectations. And this move is largely, in my opinion, based on rate cuts. So, yeah. But yes, we are. Thank you, Dan. Appreciate that. I always try to add a little bit of context when I talk about like a winning trade. I wish more of my trades looked like this. This trade has been a remarkable one. And, you know, it's very, very rare that not just me, but anyone is going to catch that kind of move on gold. It happens very, very infrequently. You know, in the last few years, it's only happened a couple times. Here's one, here's one, here's one, here's one. Guess what happened in all of these situations? All of these situations involve some level of fear. But you might say, and I could do a whole rant on this, you might say, oh, well, this isn't fear. This is just, hey, rate cuts. Nope. There's some bank collapses going on. There's conflicts in the Middle East that are still roaring. There is the bank term funding program, which was immediate stimulus available to banks that were failing last year around this time. That expires on March 11th. There's reasons beyond just, hey, rate cuts, that this market is moving like this. Rate cuts probably get us to break the highs. Fear gets us to fly through the highs, right? That's why I only trade gold on fear. Dan, I love that. If you only ever traded gold on fear, you'd probably have a lot more trades that work well. All right, let's see what kind of reactions we get here this morning to NFP. All right, we got euro dollar down, S&P NAS initially a little bit lower, Dow a little down, gold down. Dollar index is pushing. And there goes NAS and S&P just doing their thing. Let's see, where are we at in terms of data? All right, we had better than expected jobs, 275,000 jobs here. Unemployment rate ticked higher to 3.9%. And I am very keen to see what this average hourly earnings number was. That is your semi-inflation read that gets mixed in here as well. Over 1,000 people watching. Yes, thank you to everyone hanging out with me. If you could do me a quick favor while you watch, if this has been helpful to you in any way, make sure to hit that thumbs up button. Average hourly earnings came in lower than expected. And this is going to be interesting because this is not necessarily bad for stocks because earnings cooling just a bit here. Jobs hot. Unemployment rate ticking higher. And there goes gold. Gold just said, see you later. Wow. And that's going to probably be fresh all-time highs for stocks, the euro, the pound flying, and there goes the dollar. Yeah, that is an interesting mixed report here for the dollar. But again, hot jobs data wasn't enough. It seems that look at this, by the way, I have to, but this is not actually a take profit order for me on my gold trade. I'm just using it to track the risk to reward on the trade. But my stop is trailed, and I got to find another stop to trail it out at. I wish I had more moves like this, man. These are rare. I will say, crazy stock market just doesn't want to quit. Let's see where we're at with the S&P 500 trading down in the pre-market. And now, well, we're still in pre-market US. But what is your reaction to this, Kenzo? I mean, walk us through what you're thinking about here this morning or this afternoon for yourself when it comes to this jobs data.
Yes, I was watching Nasdaq since few days ago. So on the forecast, if you checked, they said the numbers are going to go down, but unfortunately, on the employment change, the number went up. But likely enough, on the unemployment rate also went up. So which means they actually cancel each other, because if maybe we have added some jobs, the percentage for unemployment also went up. So that is not really good. And actually, this is actually good, as Powell said, that we are not really far. And if maybe all this economic news trying to agree with that, it means maybe they will cut very sooner. You see,
Yeah,
that's
and
why we see the market actually. Sorry for that. So that's why the market is actually reacting to that. I don't think maybe the reaction is coming exactly from NFP. I think the market was just waiting for the effect, whatever that he said. If maybe things were crazy positive, I don't think maybe we were going to get some crazy, maybe this reversal here. But just because he said we are very closer to cutting the rates, and when we check, the news are not really that crazy positive. They're not really crazy positive. That is good news for us because we know that the rates will be cut very soon. We don't know when, unfortunately.
sure. No, and you broke that down well, Kenzo. I think this market, admittedly, as a person that would like to be in stocks, I'd like to buy indices. It's been a little frustrating to watch, but I would very much agree with you. The sentiment of this market right now is that had that jobs data come out really hot or really cold, the stock market right now is so strong that the narrative, I think, would have been fine either ways, right? So if the jobs data came out really strong, the market would have been like, oh, well, you know what? That just means companies are really strong and earnings are going to be great and, you know, onwards higher. And if the jobs data as it did came out pretty cool, pretty weak, actually, compared to expectations, in that scenario, they're just going to point to, hey, we're going to now get rate cuts. And that's great news. So it was almost like set up where and this was, I pointed this out in the, you know, earlier in the stream, but in 2022, it was the exact opposite. The market was super pessimistic. If jobs data was hot, they would sell it off. If jobs data was cool, they would sell it off. So it is kind of a thing about indices. The narrative and the trajectory, the momentum is very, very, you know, hard to call the top on the bottom on. It's been very difficult. Anyways, so you said you have NASDAQ. Do you have a position open right now?
Not yet. We
Okay.
closed some positions actually yesterday, the time the market was recovering. So now we were just waiting for the breakout on the resistance. So we actually have a pending order. If the market breaks out here, yes, we'll have actually another position. So which means we had some very nice positions. But the one that we have currently is actually US30, which is actually is going in our favor. So, but US30 is a bit slower because especially when we talk about like stocks, mostly the stocks that were performing very well are coming from the AI side, which we don't really have much in our US30. That's why we don't really see any aggressive move. But S&P and also NASDAQ are the one which are actually performing very well. And yeah, we've been just looking for buys since then. So yeah, I'm actually waiting. Maybe once the market opens, we might see a breakout.
The pound dollar. The pound dollar is actually getting a bullish read on the edge finder. I just wanted to think through this with you for a second. So the commitment of traders data is kind of mixed. So you have, you know, the pound is actually more bullish overall from institutional traders, but in the latest filing, they sold some. So by the way, for those of you guys who pay attention closely to the commitment of traders data, the fresh data will come out this afternoon. So this totally could change. We'll have to watch that pound dollar scoring for next week. But there's several things here. Retail is betting against this, right? So you made a case there, and I like this, for potential bullishness on the pound. Retail's betting against it. That's always a positive. I do want to clarify, Dan mentioned this to somebody else in the chat. I don't necessarily think that, you know, institutional money is out there just chasing retail stops. What is useful to me, though, is when I see a trend amongst retail traders, like they're super bearish on something and they're just holding on to a loss. It kind of is just stubbornness. Yeah. What do you think about that, Kenzo? What do you think about like retail kind of piling one side of a trade?
Yeah, on that, I actually first, before I answer that, I like the view on the edge finder there. So which means if maybe they were on the other side of edge finder, obviously they were not going to hold that. So another thing that makes traders to hold, you know, we trade and we don't really want to lose, and we know that we can avoid some losses. Sometimes we can be wrong, but most of us, we don't really agree that we can be wrong. And at the end of the day, you just hold, you extend the stop loss, you remove the stop loss until the account is gone, unfortunately. But there is actually also a lack of discipline. So greed, it comes when you don't really have some rules, plans that you have to follow. That is a problem. And mostly we also go through that, but it's something that you have to learn. But if maybe, let's say you have all this greed, but you have that edge finder, I think it was going to be easier for you to get out early and see, oh, this thing is 60, 87 or whatever, 60% on a bullish move. So you will see that you're not going to survive that. So you're going to get out early and you can save your account.
Yeah, no, it's so true because, you know, Kenzo, you can see that playing out in the pound dollar. As you just pointed out on the chart, it's shooting straight up. And meanwhile, retail traders, they make the same mistake over and over. They just, you know, short something and they short more and more and more of it until it blows their account, as you mentioned. So it is worth acknowledging when those scenarios are happening so that you don't get caught in the same kind of trap. So anyways, you know, something to think about there in terms of overall, we're getting some bullish reads on the edge finder for the pound. You know, gold also getting these things. And so in these situations, I think, you know, I don't have the pound dollar as a trade, but if I was to look for one in this moment, personally, you know, Kenzo, I've got to wait for pullbacks conservatively. So let me ask you, in terms of the pound dollar, if you do have a bullish bias, what are you doing to capitalize on it? Like, where are you looking for a pullback to? What are you waiting for to get into a trade?
Yeah, so on that, it's difficult sometimes because this type of a structure shows aggressive bullish move. So sometimes when you have a structure like this, it might not really give you a proper reversal like that. So mostly the market might just give you a smaller rejection, and we can use that as a potential resistance. So once the market gets out of that stress, then we can say, yeah, let's actually look for a buy. Unless if maybe the market tries to give us a proper reversal, that will be much better. But mostly, once this happens, obviously the market knows that everyone is about to buy. So mostly you're not going to get that. I like the structure that you had actually on gold. Mostly when the market is seriously aggressive, it doesn't really give us a proper reversal. It will just move like this. Then mostly you're not going to get in here if you don't really understand this type of smaller reversals. So I think even GBP is going to do the same thing, but it's better sometimes to wait for a clearer ranging structure, then the market can continue.
I totally agree. And I just want to say to audience members right now who feel some level of FOMO, whether it be on gold, whether it be on some currency pairs that you're watching, whether it be on the S&P 500 or the NASDAQ, like me, I feel FOMO on those things. Full admission, that has been really, really frustrating to watch. I've been bullish on those things, but they've run really hot and they've gone really far, and they've left me behind. And so totally understand and feel FOMO. And, you know, Kenzo and I have been doing this for years, right? FOMO doesn't go away. It's always going to be a persistent thing you have to endure and deal with. And as a trader, that's part of discipline. FOMO is not going to go away, but your discipline to not give in to it is where, you know, you'll make it or break it as a trader.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.